Dynacons Dssl, a closely held, robust company with a double-digit growth both in top line and bottom line. Dynacons, a company with a standing of over 3 decades, a small cap company with a very positive growth trajectory. Providing IT infrastructure solutions and managed services, system integration is its predominant business segment. The segment of TWAS is a distant second. DSSL is known for its specialization in banking and government projects, operates on a strong pan-India network of very effective touch points. Essentially, it caters to domestic market. Its strength lies in its integrated service delivery model. It also acts as a unified aggregator through alliances with global technology giants like IBM, Dell, Microsoft, Apple, etc. Customers fairly distributed over a wide spectrum, diverse clients from corporates and government sectors, including PSU banks. Among its major clients are Reserve Bank of India, Life Insurance Corporation, SBI, and NABARD, to name a few. Exceptional revenue growth, consistent, regular, and sizable at that. A strong order flow, also facilitating a positive margin accretion. A very impressive EBITDA percentage on the rise. Consistent margin improvement over last 4 quarters in spite of growing competition. A strong order flow, also helping a positive margin accretion. A very impressive boost to profitability from a stellar performance. Commencement of delivery on certain banking projects is also assisting the exceptional profit growth. Worth noting that H1 FY26 has reported robust results. DSSL is faced with the challenge of fluctuating net surplus from operations, non-cash component of book profits, and the abnormally stretched credit period of up to 150 days is taking a toll. Rising receivables and a bulging net current assets are substantially reducing the net surplus from operations. The additional working capital at extra costs is pushing up the finance charges. Consequently, a substantial increase is noted in the cost of finance. This in turn is causing a consistent fall in the interest coverage ratio. Profitability suffers as finance charge doubles on an annual basis from about 0.7% to around 1.5%. A very conservative and strong balance sheet with a healthy capital structure. Equity has maintained parity with asset growth over years. Equity, which is forming about 30% of asset, is quite prudent but is not exceptional, as it is not helping reduce the dependence on external short and long-term funds. DSSL leads its peers in generation of quality returns on equity and external funds while ensuring effective utilization of overall assets of the company. It is to be noted that return on equity for FY25 is marginally affected by exceptional retained earnings of the last two financial years. During the 4 years between 2020 and 2024, the share price galloped, reaching the peak in August 2024. Rising volume of profits year after year gave support to the up move, facilitating multifold increase in the share price. It's quite evident that phenomenal rise in profits during the period was the real price catalyst, reaching lifetime high. In mid-February 2025, the 50 EMA cuts across 200 EMA in its downward journey of share price into the bearish zone. Over 10 months of descending movements after entering the bearish zone, technical reversal hopes revive with the price moving above all averages with a firm but small upward price moves in mid-December 2025. The share price movement above all averages places it marginally above the Fibonacci retracement level of 23.6%. The placement level is an index of positive support to the price up move. Overall market trends supporting the price direction is likely to continue. A combination of profit growth, PE multiple, and PEG ratio present a very favorable scenario as at the moment. Profit growth being ahead of PE multiple quarter after quarter reinforces the validity of attractive valuation. A falling PEG ratio and it being less than 1 is an index of a strong value potential going forward. A sizable and unchanging promoter holding is a position of exceptional strength, but the concern is the reluctance of mutual funds and domestic and foreign institutions to invest in the company. It raises concerns on the risk perception and uncertainty about the company. This also impacts the volume of securities traded in the market, which presently is quite minimum. A strong and highly diversified set of clients, a double-digit profit growth on a consistent basis. Mounting receivables is affecting liquidity and resulting in higher working capital requirements. Rising finance costs for facilitating higher liquidity is negatively affecting profitability. The stock has underperformed the broader market for over an year in 2025 with sizable negative returns. The risk perception of the shares intensifies with the total reluctance of mutual funds and institutions to invest in the shares of Dssl. Hope this video on Dynacons was to your liking. I am Vittal Prabhu with the fortnightly video on Stock Learning Simplified. You may please access quality videos at our info card and share your valuable feedback for improvement. Highly obliged for your kind interest and valuable time. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.